You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 11th day of December, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. First live broadcast is our live training room. That runs from 9:15 a.m. Eastern to 11:30 a.m. Eastern every trading day. However, that broadcast is reserved for members only, those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, there's a link that says 5-day free trial. Click that, complete the registration form completely and as correctly as possible. And then, same day, we'll get your desktop set up, get your indicators indicating, and you don't have to worry about what day of the week or weekend that you sign up for the trial. You'll get 5 consecutive trading days, even if it stretches over a weekend. Once the live training room ends, we take a 30-minute break, and then we come back for this afternoon broadcast, which is open to the public. It's everybody, everywhere, planet Earth, with an internet-connected device. Now, there are 2 different ways to join the afternoon broadcast live. The best way, because you only have to do this once, just go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. What will happen every trading day going forward, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit is that gives you access to the question box so that you can ask questions and participate in the discussion. Now, there will be days where you're out of the office, away from the desktop, but you still want to join live. And there'll be days where you're busy and you can't join live, but you want to get caught up later. Either way, you can. It's very simple. It's called our YouTube channel. youtube.com/CFRN. You already know the YouTube part, so you just really need to remember youtube.com/CFRN. Not only do we broadcast live every trading day, as we're doing now on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,300 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week, but thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick some days at random. Listen in a little bit. You'll quickly understand the thread of connectivity, the thread of continuity. It's woven through each and every daily broadcast. youtube.com/CFRN. Okay, let's open with our daily devotional and a word of prayer, as we do. Now, our topic last week and this week is the Apostles' Creed. Our scripture today, Ephesians 2, verses 1 through 5, and I'm sharing with you from the Message translation. It wasn't so long ago that you were mired in that old, stagnant life of sin. You let the world, which doesn't know the first thing about living, tell you how to live. Filled your lungs with polluted unbelief, and then exhaled disobedience. We all did it. All of us doing what we felt like doing, when we felt like doing it. All of us in the same boat. It's a wonder God didn't lose his temper and do away with the whole lot of us. Instead, immense in mercy and with an incredible love, he embraced us. He took our sin-dead lives and made us alive in Christ. He did all this on his own with no help from us. Then he picked us up and set us down in highest heaven in company with Jesus, our Messiah. And that was Ephesians chapter 2, verses 1 through 5. Now, for some people, the phrase, "he descended to hell," is controversial. This phrase wasn't included in the earliest forms of the Apostles' Creed, but was added by a Roman theologian named Rufinus in AD 390. Rufinus didn't interpret the phrase to mean that Jesus went to a place of eternal judgment, but rather that Jesus went down into the earth and was buried. Christ, in his humanity, fully experienced death and judgment for sin on our behalf. His burial was a vicarious, victorious one, because he descended into the grave, into the earth he created. By doing so, Jesus experienced death with us and for us. He also defeated death for us and was resurrected, as we all shall be someday. The resurrection truly makes the Christian faith unique. Throughout history, many people have died for their beliefs. Countless martyrs have willingly and even eagerly given their lives for their faith, refusing to compromise their convictions because they were certain the reward for faithfulness was greater than any suffering they endured. The difference between Jesus and any guru, prophet, teacher, leader, or hero is that he was the only Son of God and didn't stay dead. Jesus not only suffered and died, but also rose from his burial place. left the tomb empty and appeared before hundreds of eyewitnesses. The resurrection of Jesus is not only miraculous, but also evidence that only He has authority over life and death and the ability to forgive sin. Because Christ isn't dead, we can be confident that all our sins have been forgiven. When we affirm the words of the Apostles' Creed, we embrace the difficult reality of death and the promise of resurrection. In the words, He descended to hell, the third day He rose again from the dead, we gain an eternal perspective. Join me in a word of prayer. Heavenly Father, as we come to you today in prayer, our hearts are drawn to the powerful truths revealed in Ephesians 2. Lord, we acknowledge our former state of spiritual death and separation from you. We marvel at the richness of your grace and mercy that brought us to life in Christ. We thank you, Lord, for your great love. You loved us even when we were dead in our sins. Your mercy has brought us into a living relationship with you through the life, death, and resurrection of Christ. As we reflect on this incredible transformation, we humbly express our gratitude. Your grace is our salvation, and we acknowledge that it is not by our works, but by faith in Jesus that we have been saved. Lord, help us to live in the reality of this new life. Empower us by your Spirit to walk in the good works you prepared for us in advance. May our lives be a testimony to your grace and the transformative power of your love. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Well, happy Monday. I hope it is a happy Monday for you, wherever you are, and wherever you are. Let me give you the numbers from around the world. Started here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 80 points. The NASDAQ is down 29. S&P 500 is up 3.5. And the Russell 2000 is down 1 point. Mixed markets. Sideways trade. It was a difficult Sunday night, and depending upon what you trade and how you trade it, you may have found this morning to be a little difficult as well. And the commodity basket, crude oil is down 18 cents, trading 71.05 last. Gold down $16.50, trading 19.98 last. That's almost 1%. Silver down 19 cents, trading 23.08 last. Again, a drop of almost 1%. In the Asian markets, at the close, the Nikkei posted a gain of 483 points, 1.5%. Shanghai gained 21. The Hang Seng dropped 132, which is pretty close to 1%. And in the European markets at the close, FTSE down 10, the DAX up 35, the CAC up 24. So that gave us a mixed day in Asia, a mixed day in the UK, and it's definitely a mixed Radio Monday here in the US of A. We got the Dow in the green, S&P barely in the green, 3.5 points. Russell barely in the red, and the NQ down 28 points, which really isn't a lot for the NQ. So we'll see how much things change during this broadcast. Now at 1:45, the top of the hour, Michael will join us, give us a recap of what happened in the live training room. Then we'll go live on the TradingView platform for 30 minutes. And then we'll wrap things up with our good word for the day. Tough start to the week for Logic 247. Last week ended up quite good. We had 20% stopped out right on the nose. This week, things have changed since this recap came out, but not by a lot, because I didn't see anything really that I think I put out 2 alerts this morning. Just didn't see a lot I was comfortable with. But as of 6:30 a.m. this morning, since the markets opened last night at 6 p.m. Eastern, we had issued a total of 7 alerts, waiting on 4. We had 3 actionable alerts, and all 3 of them stopped out. That's what's called a lack of follow-through, or a market looking for direction. So it's early, so we have the whole week to see if we can square things away. But that is the truth about trading. Now, the logic alerts, they can come out at any time, 2 a.m., 2 p.m., because futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. Along with the logic alerts, which include targets, we also have our original alert service, the concierge trade alerts. And they're a little bit different in a couple different ways. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex open, Sunday night through Thursday night. Last night, markets opened at 6 p.m. Eastern, as they do every Sunday night. And we got the report posted at 6:25 p.m. Eastern. So when we go to the 30-minute charts, just remember, it was during that first candle, 25 minutes into the first 30-minute candle, that these targets were published. And we cover all the same markets. Now, because this broadcast is open to the public, if you want to grab a screenshot, you can. If you're watching it after the fact, on our YouTube channel, you can just hit pause and jot down the targets that are important to you so that you can go back and look at your charts, see how you might have traded those. But all of our members and trial members had these targets at 6:25 last night. So what do you do when the report's published? Well, number one, only concern yourself with the markets you actually trade or markets you're learning how to trade. We use the ES as an example. First thing you do on your 30-minute chart is make note of where price is at this time when the report comes out. It's always going to be between these 2 numbers. Draw a line in the sand at the long target. Draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. When we go to my 30-minute charts, you'll see exactly what I'm talking about. Now, price gets above the 30-minute BBC. That's the green line you'll see on my chart, stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price gets below the green line, then we're bearish and anticipate lower prices. It's pretty simple. Now, as I said on the logic alerts, I give you an initial target, sometimes 2, 3, 4 more targets, depends on market structure, and then a final trade to target. Final trade to target on a short trade is always the weekly trading zone below. On every long alert, final trade to target is the weekly trading zone above. So, on the logic, I looked left for you. On the CTAs, you get to look left yourself. It's part of the learning process, okay? Previous swing highs and swing lows, those can become current resistance or support. You'll also learn over time how price behaves at a weekly trading zone. And that's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone overhead. The price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. So when we go to my charts, the zones you'll see are last week's zones, because any alerts that go out on Sunday night are based on the previous week's zones, but any alerts published today are based on this week's zones. And so on my charts today, you'll see last week's zones, but tomorrow on this broadcast, you'll see this week's zones. Beyond that, you just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Except on days when the wind isn't blowing and you have a lack of follow-through. So, let us go to the daily chart, where we have broken, we had this high here, 46.11 that we were looking to break. We've broken it. 46.17 is the high today. Friday's high was 46.13. So we actually managed to close above it on Friday. Okay, we're above the BBC. So as we look left, our next potential obstacle is at about 46.44. And about 46.71. And then the high that was put in on July 27th, 46.85. We have overcome red and falling. Now this is a pretty small candle. It's still relatively early in the day. But, I mean, this includes since the open last night. This isn't just since 9:30 this morning. This candle began at 6 p.m. Eastern last night. Now the reason I always start with the daily chart is the institutional traders, the ones who actually move price, because of their account size and the size that they trade in. They are the ones that actually move price. They look at daily, weekly, and monthly charts. The way you and I might look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. Many of the institutions have accounts in the hundreds of millions, billions, even trillions of dollars. So, by looking at the daily chart of whatever you trade, might be an individual stock, might be a crypto, be a forex pair, might be an ETF. If you'll just spend a couple minutes with the daily chart before you drop to your smaller time frames to start trading, it will have a powerful impact on your overall trading results. You see, we're able to identify where the next resistance is, major resistance, on the daily chart, but you can't see that on your 30-minute chart. You can't see it on your range chart, or this, or even this, okay? So there's a little bit of a bullish tempo to the market, but I'm starting to think it might be a head fake. We were trapped between resistance and support for a lot of days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. On the 13th day, which was Friday, we broke above that little horizontal line, closed above it, and now we're still above it, and we've taken out Friday's high. Friday's high was 46.1375, 46.17, so not by much, almost 4 points. And on a daily chart, that's not a lot. So, that's it. Let's go to where the alerts are created, the 30-minute chart. Now, Michael teaches you to execute your trades on a 7-tick range chart or a 15-tick range chart, depending upon whichever market he's trading. And you'll see that here in a little bit when we go live on the TradingView platform. Remember, these are last week zones. Members and trial members got the new zones this morning, 6:15 a.m. Eastern. And so this was the opening candle last night. Okay? So 25 minutes into the life of this candle, these targets were issued. And we pulled back to the BBC. We got up to just about the zone. Just barely took out this high from Friday. And then pulled back to the BBC and then just spent hours consolidating at the BBC. And then we finally got a wake-up call when Wall Street opened at 9:30. Caught a leg up. Had a retracement. Roy, the stop loss is based on market structure. Book a mentoring session if you decide to become a member, and I will teach you how to set your stop loss using market structure. You can always trade it just the way Michael does in the room. You can have a fixed stop loss, whether it's 7 ticks, 10 ticks, whichever market you're interested in. Whereas he uses a fixed number, on my 7-tick range chart, I look at market structure, and that's how I determine where I put my stop loss. Now, after consolidating, here's the 9:30 open, where I do nothing, and then we retrace back to the BBC. Price always reverts to the mean, as you can see over here. Pull back, held, took us up here, where we have basically a double top. And then we pull back into the BBC. But through all this, we never really pulled away, okay? We were below, we were above, we were below, we were above. Then we got this kicker, and then we retraced, pullback holds more often than not, and that sent us right up. This is the 10:30 to 11 a.m. candle. Took us right up to last week's zone at 46.15. When the market finds resistance, it's going to go look for support, which it found at the BBC on the pullback. And then it attempted another run. But now look what we have. We have a high, a lower high, and a lower high. Now the step line has not crossed blue and climbing yet. So you've got potential resistance here. Got potential resistance here. And with the new zones, you've got potential resistance up at 46.23/4. So just a very sleepy sideways day. Had a few of those here lately. Let's go to the Dow. Here's where we opened on this candle. Go back to the BBC. Like the ES, we consolidated sideways. And at 9:30, got that same move up, almost at the target. Go back to the BBC, found support, made it to the target. Now we're in the process of pulling back to the BBC again. Now when that black line, the step line, crosses blue and climbing, that's an indication that price is definitely going to attempt to pull back to the BBC. Now, as price is pulling back, that's counter trend until price gets below the BBC. So the logic channel, there's over 15,600, I think it is now, individual handcrafted alerts. Every one of them is a trend trade. So before I would put out an alert here, I'm going to wait for price to pull back to the BBC. Wait and see if it holds. If it holds, we'll start printing green candles and we'll trade long. However, even though the pullback holds more often than not, we know eventually it will trade through the BBC and start creating legs in the other direction. So if we should close, if we don't hold the pullback to the BBC, then this low right here is potential support. This low right here is potential support. This low is potential support. And we got a weekly zone at 36,240/245. That's a new weekly zone. These are the old weekly zones. So we did hit the long target on the Dow. On the Russell, or that same sideways action. We opened last night, ran right up to the zone resistance. When the market finds resistance, it will go look for support. Then we just consolidated all night. And then this morning at 9:30, we reached up to the target, but we did not take out. This vertical line separates today, Monday. This was Friday. This was Thursday. So this high today on the Russell has not yet taken out Friday's high. Okay, you're very close to that long target. There's plenty of room to get your goal for the day on that move. But again, This is not good trading conditions, okay? And you've got price just hugging the BBC or hugging a weekly zone. Either just put the mouse away or go look at another market, because we trade every market exactly the same. On the NQ, here's where we opened last night. Now, price was trapped with resistance overhead. See, blue and climbing on the way up is your friend till it gets directly above price. Then it becomes resistance. So we opened last night. We ran right up to blue and climbing as it was on its way to becoming red and falling. That resistance sent us looking for support. Consolidated for a little over an hour. These are 30-minute candles. And then we take a little dip. Okay. Now looking left, where would your obstacle be? There. That would be your first obstacle. And then clear sailing. But we just, now that candle, I mean, it opened at 68 and dropped to 55. That's over $200 per contract traded in that one candle. Then we get above the BBC, pull back to blue and climbing. We make a run at 4 a.m. Eastern, right up to the zone, resistance. Resistance will always send the market looking for support. Pull back holds more often than not. So we get a leg and a retracement, and a leg and a retracement, and boom. 9:30 opening candle on Wall Street took us to the target, through the target, and we almost made it to the zone overhead, 16,202/203. Now, we're attempting to get back to this high, but if you look at your step line, it's kind of starting to hook, so this thing may be running out of steam. So be cautious on the long side, okay? It may do it right now. If it can take out this high and get above this zone, okay, then the step line may not cross. And we'll keep an eye on it during the broadcast. Never any reason to really look at trading to the short target. We had an obstacle here, this swing low, and we had this zone. You would have wanted to trade. You want to let price get through that zone, take out that swing low. So from like, 980 down to 960, that's 20 points at $20 a point. That was a beauty. Be interesting to see if we can break through that zone. Again, these are from last week. Tomorrow on the broadcast, you'll see this week's zones. Members and trial members got them this morning at 6:15 a.m. Eastern. Okay, so let's go to crude. Here's where we opened, came down to the BBC and found support. See how the pullback holds more often than it doesn't? It held last night and took us right up to the target. Then London open, price gets below the BBC and takes us right down to the short target. Looks like to the tick. This candle opened 71.22. We'll just call it 71.20. From 71.20 to 70.20, that would be $1,000 per contract traded. Didn't quite make it that far. Okay. It opened at 71.22, and we'll just say it dropped to 40. That's about $800 per contract traded. Now, when the market finds support, which was defined back on Friday, right here, support will send the market looking for resistance. Look at all these candles that have tried to break through the BBC. Wick after wick. When you see wicks like that, it's not a good market to trade. Wait till it sorts itself out. We're up against the BBC again. We could break through. If we do break through, then you got to expect resistance here, resistance here. Now, you see this bearish cross where the red line gets below the green line? Whenever you have a bearish cross that leads to an extended move like this, the first time price revisits that area will almost always be good resistance. And there it is, all across there. All those attempts to break through that bearish cross, every one of them failed. Same is true of a bullish cross. Like down here, we had a bullish cross that led to this extended move. If price drops back to the area of that bullish cross, we anticipate support there. Okay. All right, let's go to gold. This was the opening candle. We pulled up to the BBC, which we expect to be resistance until proven otherwise. And then we dropped below blue and climbing. And this candle here opened at 2019.2. We'll just call it 2019. It took us all the way down to the target at 2011. That's $800 per contract traded. When the market finds support, we go look for resistance. And when price can't pull all the way back to the BBC, that's a definite sign of weakness. So we go back to the target again, consolidate sideways. We attempt another pull back to the BBC, but buyers just weren't committed. And so now, look how far we've dropped. Here you have the perfect stack. Price, step line, red and falling, BBC. Now you see how the step line's starting to hook? Once it gets on the right side of red and falling, we expect price to go back to the BBC. But when you have this perfect stack here, as you did, this candle opened at 2006.3, we'll just call it 2006, and it dropped to 1994. It's $1,200 per contract traded. Silver, here's where we open. Resistance overhead, support below. Now with silver, you only need 2 pennies to get your goal for the day. So this candle opened at 23.28 and it made it down to 23.21. So that's 7 pennies, $350 per contract traded. So when the market found support here, defined by this previous low, pulls back to the BBC, attempts lower, pulls back up, finally hits the target. That support sends it looking for resistance, and then we trade through the target to the downside. And I think Michael has arrived.
I am here.
Okay, so there's, I think, 2 more markets we need to cover, or 1 more market we'll cover, guys, and we'll wrap up with our good word for the day after Michael gives us a recap of the live training room, and we go live for 30 minutes on the TradingView platform.
Yes, make sure I got that scheduled. Hang on. I don't believe that I do. Is there a recent one that we did? And no, I don't. So let me do that right now too. All right. Here we go. Good afternoon, everyone. Today is Monday, and what a Monday it was. If you have not taken a free trial with us and you'd like to take a free trial, go here to mytradingview.com and click on this button right here. It says start your free 5-day training now, 9:15 to 11:30. When you click on that, you have an open mic, Dwayne. I don't know if you know that. When you click on that, you are going to be brought to this page right here. Nope, this page right here. This registration page. I think this is the right one. I did open one up this morning too. Nope, that's the one that we're in. This page right here. All right. On this page, all we ask for is your name, your email, your phone number, and down here, if you have TradingView or Ninja, give us your machine ID or your TradingView login ID. If you have both, give us both, and we're ready to see if you're both. Do that, and then you should probably take a look at some of these videos in here. Right, these videos show what we do in the room in the morning, so you'll be acquainted with it all. And then take a look at the trade rules. These are the rules we use for every trade that we do, right here. Right, so we'll get into the spreadsheet. Everything seems like it got locked up on me today, but hang on. Okay. So today, this spreadsheet goes back, I'm not just today, every day. The spreadsheet goes back over 10 years of our daily results. Today's results were, now we didn't get to trade all the markets that we normally trade because everything on the CME got messed up this morning. You may have been sent a notice. I know anyone that was using Daniel's Trading or DT Pro, they did get a notice that everything that was on the CME was messed up this morning. So it was rough for the first, well, I mean, I didn't even try for the first hour and a half, probably. I didn't even try with anything on the CME, but we did try at the end of it all. And, you know, the YM is what we traded. The YM, crude, and gold is what we traded because none of those are on the CME. These are on the COMEX, and this is on the CBOT. And so we were able to get around needing markets on the CME. And then once stuff did start working again, we finally got back to it. Anyway, if you're going to read what's on the spreadsheet, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We made 24 ticks in the NQ, 17 ticks in the YM. We lost 10 on crude and made 2 on gold. Now, we actually made 7 on gold, but the first 5 ticks I made on gold were just with 1 contract. So I wanted this number over here to be accurate again. I didn't want it to be like that one. I mean, that's accurate, but I want it to be accurate with 12 contracts because that's what we're doing right now. So anyway, today it took 100 minutes. Now that number might be a little bigger than it needs to be. This number was way bigger than it needed to be. I think that's way bigger. It's twice what it needs to be. But 100 minutes and 10 trades to get to the goal for the day. At that point, we're up $1,200. We took a total of 12 trades this morning. We made a total of 125 this morning in the room with 1 contract. So on the month now, we're $1,782. It's over 7 trading days, averaging $254 per contract for a 2-hour trading day. On the year now, we're at $101,877. That's over 234 trading days, averaging $435 per contract per 2-hour trading day. Now, if we were to quit trading when we get our goal for the day and we were to add 1 contract per month, so far this year, we would have only had to work 87 hours. It worked out to a nice round number today. 87 hours so far this year. We would have averaged $2,417 per hour. Okay. Okay, let's get into the trades that we actually did. Now, on the NQ, this is normally crude oil, and I'll bump it back to crude oil in a minute. Why did I say on the NQ? Okay, on the crude oil, this is crude oil. What did I say on the, okay, anyway, doesn't really matter. Doesn't matter why I said what I said. On the crude, we started out with this one stop out right here, and then you can see it just hugged this weekly trading all the way till over here. And then right at the end, it got out of it and pulled back up and gave us this green arrow. We took the short, we ended up with a break even on it. It did not continue the trend. It just went right back to that weekly trading zone. Tried it again, right back to that weekly trading zone. So it's just having time getting away from the trading zone. The gold, we had, let's just look at this. On the gold, we had a couple of trades. We had this one right here where we got 5 ticks. Then we had a break even. Then we had this one over here where we got 7. I only took credit for this one and this one, the break even and the 2 ticks that put us at 7. We didn't actually get 7. That put us at 7. We didn't trade any more gold today. It looks like during the break there were a couple of green arrows that worked out okay, but we did not trade any more gold. The NQ, we finally got to trade that toward the end of the session. And let's see. On the NQ, these were the trades we took for the end of the session. We had a plus 20 on the first one, a plus 4 on the second one. And then I think I took one more that I got a break even on somewhere in there. Doesn't look like I wrote it down, but I know I took one more that I got a break even on. Might have been this right in here, right toward the end of the session this morning. During the break, it looks like there were some blue arrows in there. There was one there, one there. Nice blue arrows give decent trades there during the break. The YM, that was the other one that we traded today. So we need the YM right now. Slide all the way back to the beginning. It's not that far, really. The YM, you see the blue arrows working out pretty well. Our first blue arrow here that we took a trade on the YM, we got 10 ticks profit on that one. The next one, we had 12 ticks altogether. 12 ticks, we got 2 on that to give us 12, and then 5 more here to give us 17. I believe that was all that we did with the YM. And the last trade that it gave was this blue arrow right here. So the long-term direction is really flat right here. So that blue arrow would not have been that appealing to me. I like the long-term direction to be separated like this right here. Okay, that's when, if you get a blue arrow when it's separated like that, that's when you're gonna have the better trades, like the blue arrow when it's separated like this, going short. Those are the ones you really, when it's flat like this, you're usually going sideways already. So there's a good chance it's going to continue going sideways. If that, you get your blue arrow, that's a good trade. Okay, every now and then you're going to get one at the end of the trend, like this one right here. That's not going to work out at all. But usually, if it's spread out, those blue arrows are going to work out. Here's the YM. Wow, I still have 6 minutes left. All right, well, I can't start the live stream early. I guess that doesn't hurt anyone if I start that early. Hey, if I started early, then I can end early. Is that the deal? I guess I can end it whatever I want to. Anyway, if you have not taken a free trial with us, I haven't gone over that yet, have I? If you've not taken a free trial with us and you want to, go here to my trading IQ, sign up for it. Sign up for your free 5-day training right there. I wanted to come in and see, Roy, you did make it in here. Okay. I saw your email, and you saw my response to your email was that the link in that email that I sent to you was for the 2 o'clock meeting that we have. Okay. Yeah, so if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on this button right here. When you do, you're going to be brought to this registration page. On this page, just put in your information, your email, your phone number. Down here, if you have a TradingView ID or username, give it to us right here. If you have a Ninja Trading Machine ID, give it to us right here, and we'll set you up. Okay, so that we don't have to go through a whole bunch of back and forth after you start your trial. You want to make sure at the beginning of your trial that your desktop is set up. That's what I'm going to do with Roy in an hour from now. An hour. All right, so well, I could start the live stream right now. It wouldn't hurt to start a few minutes early. And what we have right now, what's setting up right now is a blue arrow long trade right here on the NQ. So, you know what, I'm just going to start it right now. Here we go. Maybe I will end it a few minutes early too. I'll start it right now, 12:56. I'll end it maybe a few minutes early too. All right, so the live stream is now beginning. What we have going on right now, we're coming off a higher swing here on the NQ, so we're pulling back down to test the ribbon. The close right there would be a long opportunity right now on the NQ, right? A opportunity from right where it's at on the NQ. And what you anticipate is that it's going to get up above this prior swing high. Now, for anybody that's watching right now for the first time, you see all this stuff on a small time frame like this, and you might wonder how it applies to a larger time frame. And to do that, to see, all you have to do is go to a larger time frame, and you will see that all the same things still apply, except the risk management is a little bit different. Okay, if you're going to trade here on a 30-minute, you still look for the price to pull back down and test the ribbon down here. You still look at the same stuff. It's just now your stop is going to be down here instead of being a predetermined number like with the NQ on 15 range. The stop is always 20 ticks. Stop is always 20 ticks away. But now, if you were to, if we were to come down here and give you a long right here at the ribbon, your entry point would be right here at 16. Let's say 121. Let's say 122, and your stop would have to be down here. 5 points away, 4.5, 5 points away, which is about what we do anyway. We do a 5-point stop to begin with, but your stop would have to be down here. Okay. With the 15 range, we do a 5-point stop. It's 20 ticks, 5 points. And it'd have to be about the same thing for this one. If you were to get in right here, your stop would be down here. Okay. It's just the risk management's a little bit different. Okay. Like right here, we came off the ribbon right here, your stop would have to be below this bar right here. Below this bar that got you into the trade. So right here, your entry point would be at 52, we'll say, and your stop would have to be down here at 86. So it's roughly, again, it's roughly a 5-point stop, 5.5-point stop in this case, and your immediate would be up here. Okay, your prior swing high. So if you got in here at, we'll say, right here, what did I say? The ribbon's 52. If you get in right here at 53, 50, whatever it is right there, your immediate target would be here, the prior swing high. So you'd have like a 7-point target right there, 8-point target for the prior swing high. Same thing over here. If you get an entry down here, your immediate target would be up here. Okay, that's how you would look at that. That last NQ trade on a smaller time frame. Hang on, what's the stop loss for each alert? Okay. I know you're asking Dwayne that stuff, and I don't know if Dwayne answered that stuff for you. I'm sure that he will when he comes back on, if he hasn't already. But I can tell you the stop loss for the alerts will be no more than $300. I think Dwayne is, I think he did it. Let me see. I see something over there, and I can't see exactly what it is. Okay. Yeah, well, I'm going to meet with him. I see Dwayne's, all his comments in there are basically to set up a meeting with Dwayne. And I'm going to meet with you too. Well, I'm going to meet this afternoon, Dwayne, in about an hour. So I'll go over that as well. Sorry, the 15 range trade that set up a few minutes ago. It did run from here all the way to the prior swing high. Okay, I wasn't really paying that much attention to it, but it did do that and went into profit nicely there. So you had an opportunity to take some pretty good profit, and that's what your immediate target would be right there at the prior swing high. And then, Roy, I'll teach you in Thursday's lesson plan. We go over the DOM and how to read the different DOMs. Now you have Ninja, right? So there's another thing. There's another thing that you'll see is how to read the DOM, how to interpret numbers from the DOM. Once you start approaching a target level, if you see something before or after it, that price is really going to be attracted to. Okay. All right. So Dwayne, just so you know, we did start the live stream. Has not run too hard. Let me go look at that for you. 1 minute. Let's go see. This was stuck on Bitcoin. And look, this stuff we said last week where Bitcoin was going to retrace to. Remember we said that last week? Oops, sorry, I did that on the wrong thing. I said over the next week, look for Bitcoin to retrace to this level right here. And it finally has. So right now you should get a good bounce. Those guys that were watching this thing last week, when I was saying it was actually here at 42,000, and I was saying at that point the number was going to be down here where it was going to retrace to, but then it ran all the way up to 45,000. So that moved the number right here. to where it was going to retrace to, and you see it just got into that number today. I know you're sitting snap, so I'll get to snap for you. Snap. All right. So this is snap, and this is snap on a daily. Has it run too hard? Well, it hasn't had a decent pullback yet. I guess that's probably what you're asking, right? It hasn't had a decent pullback yet. So let's just look at it on a smaller time frame. What are you talking about, Hitch? What time frame are you talking about? You're talking about daily, intraday? What do you mean today? I mean, you see there's a gap up today, and it's a little red on the candle, right? It opened today, but what kind of time frame are you talking about? No, it's a whole bunch of different things mixed up. This one here is actually there's another slingshot that we have for I've just got a couple other numbers in it. This is actually a whole bunch of math that goes into it. It's not really that what you're saying there. No. Okay, so you're interested in daily. So this is the daily right here. And so you can see Snap right here has this huge gap. Now it takes forever for equities to fill gaps, but it should fill some of that gap. What I would expect is kind of what happened right here, and what else happens really. When you get a move like this, you're at a point right now where it should pull back. And I would think it's going to pull back to right about here. It's about 1550. But if it does actually pull back, it would be right about 1550 is what I would think. If I were holding it right now, if I were holding profit in it, I'd be trailing my stop really close. If I were holding profit right now, if I were long holding profit. And if I were looking for an option position, I would consider buying some puts right now, honestly. No, it is not. Everything we have is proprietary. But I would consider buying some puts if I were holding right now, even if you long it and you think it's going to keep going up over time. You know, you can make a little money on the pullback right here because it looks like it's probably going to pull back right here. Yeah, deep.
Muted.
There, I'll do that for you. I think you hit your button. See.
Unmuted.
Right, I think eventually it's going to pull back. I said you had a hot mic, and I didn't think you meant to have a hot mic. Oh, okay. Sorry. Go ahead. Yes, I'm live. Yeah, I said that a few times. Yep. It might be. No, go up at the top. Go up at the top. It should be up at the top right now. If you refresh your page and go up at the top, we've been live for 8.5 minutes. Yeah. It's not okay. Here, hang on. Let me give you the link. Here. That's what I know. That's what you're trying to do. Trying to get in there and help me. There you go. I think I just stuck it in there, didn't I? Okay. There. You can jump in right there. Thank you. All right. So yeah, but it's gonna have a retracement before it goes straight up there. That's what's, you know, I don't know. You're saying Wells Fargo was targeting that? Is that what you're saying? Snap Wells target 22. That's a long way up there. It's gonna have flats before it does that. You know, you get in your gaps here on this, and it's always, you know, you get this gap. Now it took a while to fill that gap up. Well, it took a few days. It wasn't that bad. You know, the 5th of December is when the gap started, and the 7th of December it filled. This gap, you know, the 8th is when it happened. Well, here we are on the 11th. So this gap is going to be filled pretty soon. This one over here, this gap began on the 30th of November, and it kind of got filled over here. And it really got all the way filled, but kind of got filled over here on the 1st. But but the gaps usually get filled, right? They take longer with equities than they do with futures. With futures, the gaps seem to fill right away. Like Sunday nights, for instance, if you go and look at any gaps that happened that night, on the ES and anything that came up. But yeah, I mean, I'm not saying that it's not going to go up anymore. I'm just saying that it's due for a retracement, and this is where it should retrace to, right here at 15.5, let's say. Okay, and Dwayne, I don't know if you heard me earlier when I said, we were talking about Bitcoin when it was running up to 42,000 last week. I remember we in the daily chart where it was going to pull back to. That's where it is right there. Do you remember that? Now your mic's off, and I want it to be on. There it is. Okay. But yeah, that was the thing on Bitcoin, and that's probably what's going to happen right now, Hitch, with the snap. Similar thing. I mean, the markets are always doing the same thing, right? The markets are always going up and down and up and down and up and down until they chop around like that, and then they go down and up and down and up and down and up and down. And it's what our indicators are here to do is give you precise entry points here, and then the training is to help you see these target numbers and beyond to know when to exit the trade. Okay, help you enter and help you exit, enter and exit. Getting into the trade, then managing the trade. That's what our stuff is all about. Anybody can enter a trade. It's knowing what to do when you're in the trade. Okay. And have any other symbols? If you look at now this thing, the gap up was right here, but I liked it better looking at it. How I had it on the 30-minute there. I liked it better on the 30-minute. This intraday stuff that we've done so far today, it's due for a pullback. It's resistance right here. There's a bunch of sellers right here. It's finding resistance right there, and it's due to get pushed back down. But there's a bunch of buyers right here, so it's due to get pushed back down right to this level, I would think, and then move back up. Okay. But you can play it both ways. I mean, if you're long, you can stay long and buy some puts right now and still make money if it goes down, and still have your long position. If if you're already up 66%, that means you probably bought it somewhere back here. And if it pulls back, you'll lose some of your paper value, but you gain paper value with the puts if it drops. And then if it starts taking off, just get rid of the puts and everything else keeps going up. It's up to you, of course. This is not trading advice. It's just a mere suggestion of one way you could look at things. It's like it presented itself to you, right? But as far as all this other stuff goes, yeah, you had left this morning, Roy, before I went through and put the actual weekly trading zones on here on the bigger picture stuff. Now, we usually go through this stuff in the morning session on a Monday. You usually go through this stuff pretty early on. But you see this market right here is crude oil. And it was all junky right here around the ribbon. And that's why it was all at that one weekly trading zone all morning. It was all messed up right in there. And if you look at it here, on the whole morning, it was all the trading zone. We stopped out on that very first trade, and then we had to wait till all the way over here to even get another trade. And we ended up, but now it's broken out of all that. It looks like it's broken out of all that. And these right here are the levels, the same levels from from platform to platform. They're the same numbers from platform to platform. Both here is the same as this level right here. The same exact numbers. And this is a 30-minute. All right, this one is true price action because it's a range bar. This is a 30-minute chart. So at the end of, now this is a countdown to 0 kind of bar. When this number gets down to 0 seconds, 0 minutes and 0 seconds, it's going to go to the next bar. You don't know where that bar is going to be. When this bar exceeds 15 ticks in range, it's going to go to the next bar. So that bar is either going to be like right here, or it's going to be right here, one or the other. This one, it could be way up here, it could be way down here, it could be right here. You don't know. But obviously, you know, I looked at the bigger picture. I mean, we'll go over this in the meeting that we have in a little while. But when price on the 30-minute is above the BBC, above the ribbon, then it's trying to get to the weekly trading zone above. When it's below the ribbon, it's trying to get to the weekly trading zone below. If it's hovering all over the weekly trading zone, then you just gotta wait. You just gotta wait until it gets away from it. See right here on the ES 30-minute. Oops, sorry. I was trying to do this differently. And it's not letting me do it. Anyway, on the ES, it was hovering all over the ribbon. I mean, all over the ribbon right here. It wasn't on the weekly trading zone so much, but it was on the ribbon right here. And you know, it's finally breaking out of that. I was hoping that when the European markets closed at, when the European markets had closed at 11:30, that we're going to get a little more action in here. And we did. That's what it looks like now on a 30-minute. And you know, you can see this morning on the ES, I think this is the one that I had my ES on. But the ES was in a no trade zone almost the whole morning. That's why I got rid of it for the time being. Tomorrow, hopefully tomorrow will be a normal session and we'll have just the normal market, so we'll be able to trade everything normally. It'd be crude, Russell, ES, and NQ. Those would be the normal markets. Okay. But the beauty of this is if the markets that you normally trade are not volatile enough or they're having problems, you know, technical issues, which is what the case was for us with anything on the CME this morning, we were having technical issues. We were able to go for stuff that was on the COMEX. You know, we had gold and crude oil on the COMEX and the YM on the CBOT. So I'm just able to go trade something else until it gets resolved. All right. So yeah, back in here. We don't have any trades in here right now. We had a green arrow back here that went enough to get the stop to break even, but anytime you get a green arrow or a blue arrow, it's got to put in a higher swing after the arrow before you can trade in that direction again. Now we're not going to have anything here on the YM because we're inside a weekly trading zone. We're not going to have anything here on the NQ because we're in a no trade zone. I'm not sure if that's a no trade zone, but we're in a no trade zone right now, and it looks like it should be probably. And we need a lower swing here on the gold, and over here on the crude, we need a pullback, test of the ribbon. So that said, I'm happy to look at any other symbol that you might want to. And here to use 3 time frames, a 3-minute, a 1-minute, and a daily. And the stop losses, you know, the reason I use range bars, well, one of the reasons I use range bars is because I always know what my stop loss is going to be when I put a trade on. I always know my stop is going to be exactly the same. You know, when you go into a minute or any other time-based bar, or you know, any other kind of bar, really, any bar that counts down to 0. You know, like any bar that counts down to 0. In here, if you go to there, go here, do this tick bar. That's transaction bar. You know, a lot of people run that at 233 ticks. That counts down to 0. A volume base, you can run that. Now on the ES, you could run that at 1,000 contracts if you want to. That counts down to 0. A range bar, you got to exceed the range of the bar. There's no countdown to 0. It has to exceed 10 ticks to get to the next bar. You could be in a bar for an hour, you could be in a bar for a second, but it's got to exceed 10 ticks to get to the next bar. So it's true price action that moves you to the next bar. 1 month, not 1 minute. Okay. Okay, so a 3 month, a 1 month, and a 1 day. So you're talking about really big time frames. You're not talking about minutes. Look at me talking about minutes. Sorry, this is the world I live in. Yeah, the 1 month, 1 month, 3 month, and 1 day. That's what it's looking like. Not what. Yeah, that's investing. That's not day trading. That's for sure. But this on the 30-minute then, this is still looking like it's going to pull back down here. You know, about 50 cents is what this looks like it's going to drop. Okay, and then from there, you know, 22 is definitely a possibility. If you look at this on a much bigger picture, like we'll go to the daily and we'll look at it on the daily. Okay, so the daily had a gap way back here. It hasn't really had a good pullback in a while on the daily, you know, yet in November. But it's run up, had a little pullback, it's run up. It hasn't had a pullback here yet. It had this little consolidation right here, which was kind of like a pullback on the daily. I'm thinking it's going to have a little pullback here and probably rally to the year end. Okay. That's what the charts are looking like. You know, and what did you say? C-O-G-T, C-O-G-T. This one. That's a little bit of a gap right there, isn't it? We had a nice blue arrow back here, middle of November. It really did tank. There's got to be a reason it tanked, though. There's got to be news, something that made it tank like that, made it drop. Gosh, almost 75%. I don't know. I used to be a bottom fisher back in like 1999, 2000. I would look for things like this and say if that's a really valuable stock, if it's really got earnings and it's just a bunch of garbage that made it drop, and buy a bunch of it. But I really don't know anything about that. I haven't traded equities in a long time because being a bottom fisher like that, I got messed with one time too many by people filing erroneous SEC documents or false SEC document. Too many class action lawsuits. You get a nickel on a dollar. Are they? Well, I mean, mine were too. You know, we could make 20% in a day. But back then I found the futures, and I found that I don't have to hold anything overnight. I don't have to go to sleep wondering if something like this is going to happen when I wake up in the morning. I do not worry about that at all. All right, so it's 119. Now I've actually been going a little longer than where's the thing? There it is right there, 23 minutes so far. Yeah, because I started a few minutes early. But yeah, when we meet today, Roy, we'll be able to cover a bunch of the things you want to cover. And then if you do set one up with Twain too, then you'll have just a virtual plethora of information to work with. Okay, what we're doing works on all time frames, on all markets. And I break it down into little pieces because, the way that I trade, scalping, the way that I trade, I just want to get in, make some money, and get out. And, if you look at the spreadsheet, the results so far this year, doing just what I do in the room, starting with one contract. If you did everything just like I did in the room, started with one contract, and traded exactly like me all year, you'd be at $604,687 right now. And that's trading 2 hours a day. So that's just doing the scalping that I do. Now, what we want people to do is not put pressure on themselves and not overtrade and not trade too much. Like not trade until they start to lose confidence because they've got stopped out 3 or 4 times and they're not exiting at the high of the day. Just get your goal for the day and exit. And if you do that, if you exit when you're at your goal for the day, that often will be the high of the day for you because you won't be trading anymore. Just stop trading when you get there. And that's all you need to do. That's what these results are right here. Okay, if you quit trading when you get your goal for the day and you add 1 contract per month. Now it's not just simply adding 1 contract per month. You have to earn your way to 1 contract per month. So for every contract, I had to make $2,000 in profit. So from January to February, I had to make $2,000 with 1 contract. Then I had to make $4,000 with 2 contracts. Then I had to make $9,000 with 3 contracts. Let's see. Then I had to make $8,000 with 4 contracts. Then $10,000 with 5 contracts. Then it wasn't $9,000 with 3, it was $6,000 with 3. But then you get it though. You know, I had to make $2,000 per contract. So last month I had to make 22,000. I made 31, and this month I have to make 24. And we're only 7 days in. And I know we have the holiday and all that, but we'll still do it. I have to make 24 this month to get to 13 contracts for next month. Okay. So it's, you know, it's really not a complicated process to follow, as long as you can be consistent and you can be disciplined enough to quit when you get your goal for the day. Now get in there and get the goal for the day, be consistent, get your goal for the day, and just accept that that's what you're going to do. You know, it's a marathon, not a sprint, right? You can make it a sprint if you want to, but it's a lot harder to sprint when you really want the sprint to last long. Anyway, back to trading. Any other symbols, anybody? But this is what we've done this year. This is exactly what we've done this year in the room in the morning. Yeah. And this goes back 10 years. It's our daily results going back 10 years. If we slide it all the way back up here, look, January 2nd of 2013. Back then we were trading soybeans, the Russell 2000, gold, crude oil, the YM, the NQ, natural gas. I don't even know what that is. I think I spelled beans wrong, but soybeans. The yen, we were trading the yen back then. There was a while where we were trading the euro too. I don't remember where that was. Over the years, we had the euro in there. But you can see in our accounting and statistics of everything, got a little neater as time went on. But the Russell 2000, natural gas, and gold. I mean, and what year is this? I don't even know what year this is. 2015. How old was my son in 2015? He's 19 now. Think about it. I mean, people that have been with us since the beginning of that sheet, that are still with us. You know, watch his kids grow up. All right. Affirm, I'm not sure what you mean. You know, everything that I do in the room in the morning has defined risk. Every trade I put on has defined risk. I mean, these are all 7-tick. Well, this is every 7-tick range chart. If you look here, if you go here to our website, one of these is our website. This one is our website. Here it is. If you go here to our website and look on the trade rules page, this is for the different time frames that I use. You know, if you're using a 7-tick range, use a 10-tick stop. You know that ahead of time. You move the stop to break even after 4 ticks in profit. A 15-tick range, use a 20-tick stop, trails to break even after 8 ticks in profit. So all the decisions. Oh, Affirm looks like a coin. FRM. Okay. I'll go take a look at that. Yeah, sure. So all the decisions they're already, you know, half made for you. All you got to do is follow the rules. These are the rules. Just follow the rules. And that's it. So let's go look at that other, this one. Oops, sorry, I don't want to do that. Let's go here. We'll blow it up. We don't have any trades happening right here. This is pretty close to a trade right here on the gold. But the gold is so slow, and I'm not sure I have a gold down open anymore this morning. Yeah, I do. Yeah, I do. Here, so I can short gold right there. It still looks okay to short. It hasn't gone 4 ticks into profit from the entry point. 2.6 down to 2.3. It's only gone 3 ticks into profit. So here's gold. Okay. No. My stop should be 10 ticks away, and it is. Once it gets 4 ticks in profit, then I'll move the stop to break even. I know that ahead of time. All right. There's 2. It's just got to get to right here, and I'll bump that stop to break even. And 1 more tick, and that stop goes to break even. One more. All right. It's almost there. It's going to go. It wants to get down to 91.6. Oh, so close. 91.6 is what it wants to go down to. The low of the day is right here. This is the low of the day right here. I think it wants to test that again. But our stop is in place at minus 10 ticks. If we get stopped out, we get stopped out. It's got to go 4 ticks in profit for me to bump that stop to break even. It hasn't done that yet. No, from my entry point. So usually, because I have 12 contracts on, I usually get a lot of slippage, and my entry point is not usually very good. There it is. Break even. Say yes. Oops. Hang on. I forgot. I can't move to break even that way. I have to move it manually because I had to put the stop on. Really? Okay, so now we're at break even, so I don't have any worries about this trade. I think it's going to go down through the low of the day, but the first spot it needs to get through is right here. It's going to give me a break even, I think. Yep, break even. But what it should do is go down here. You get down to this level. Okay. Oops, just lost something. Hang on. Yeah, I'm trying to get back here. AFRM, that's what I was going to see. Yeah, AFRM. I was going to put it in here. AFRM. Firm holdings. There we go. Okay, so this is a $36 stock, and you want to look at this, sort of the same looking chart here. It's kind of started its pullback already, though. You know what I'd be looking at, the 50% retracement from this level to this level right here is going to put you right about here. Right about here, 37 probably is what I think you ought to find the bottom at. If you look at that, like, let's look at it on a 30-minute. Yeah, $37. $37 is what I meant. Oh, okay, yeah. That was talking about that was on the daily though. That was on the daily. On the minute chart, it's already crossed over right here. See this right here that you see right in the middle of all this junk right here? The MA1 and the BBC have crossed over right here. And when that happens, let me throw a couple other things on this chart. Let me change it around just a little bit. This is the stuff, Roy, the stuff that that Dwayne does with his 30-minute charts. Looks at it a little more like this. All right, now we have the outer bands and all that on there, but what you're looking at here is the black step line, which is in the MA1, which is the red and blue line, and the BBC, which is this green line. When you get the MA1 and BBC cross like that, that is usually the start of the change of direction. Okay, when you get it back here, that is usually the start of the change of direction. All right. Now, looking at the way that this price has come together and acted, there's buying pressure right down here. So it's likely to just pull back up and bounce off this a little bit and consolidate sideways. The way it's acting right now, if you were to draw a trend line like this, and this is on the 30-minute chart, right? I'm just going to start here. The reason I don't like drawing trend lines is because it's that ambiguous starting point. We'll just start there. That's what it looks like the bottom is right here. So if it does pull back up here and bounces off this crossing point of the MA1 and BBC, bounces off that, which is going to be right in the middle of the ribbon, it'll probably push back down to this, which will probably be right up about this point. So it looks like it's gonna drop some. Look back here to the left, and that 37 number comes in again. If it spikes down below 37, it'll get down to this swing low where there were buyers before. So it's pulling back up, it's bouncing back down here on the 30-minute. On the daily, it just looks like it's going to go down a little bit more. Probably down into here on the daily chart. That's what it looks like to me. So, you know, when you're looking at the bigger picture stuff like that, it's all the same. It's all doing the same thing. It's just bigger numbers. Oh, is it really? Is that what that is? I did not know that. What time is it? 1:32. Hearing odd noises. Oh, it's 1:32. Crap, I gotta go. All right. That's great. That's great that it's a free trade for you. All right. So guys, I didn't realize it was 1:32. I have to actually go because I have another meeting coming up very soon. If you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on this button right here. Now, we focus on futures. It's give you 5 days in the morning session with us, but it'll also give you access to the indicators. All right, you get free access to the indicators. You got to give us your TradingView ID. You'd have to give us that TradingView ID, and we'll set you up so you have free access to the indicators. You can use the indicators for 5 days. You also get a one-on-one training with us during that 5 days. Okay, so if you want to hook up with us so you can look at it on equities, on bigger time frames and all that stuff, you can do that too. All right, so that's it. Thanks for coming, everybody. I totally forgot about the time. All right, so I'm going to wrap up the live stream, and I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am. Recap of the morning session.
Today, it took 100 minutes and 10 trades to get to $1,200.
Good job.
Thank you.
In a challenging market.
Yes, it was a challenge. Okay, Roy, is Roy still in here? Roy, I am going to try to be back right at 2 o'clock. Okay, I'll be back for that meeting right at 2 o'clock. I'll try to be back right at 2 o'clock. If I'm a few minutes late, just hang out, okay? I've already sent you the link, but we will be doing that meeting at 2. Right, or right around 2. All right, that's it. I'm off.
Okay, guys, we got through silver. We got one market left we didn't cover. Euro. Okay, here's where we opened last night. We attempted to move higher. Never really pulled away. And then we got below. Here, guys, let me put you on hold for 1 second. Okay. Sorry about that. Okay. The euro. It's just weaving itself back and forth. I mean, you don't have, see how we got below the VVC and stayed back on Friday? Above, we're below, we're above. Now we got a drop here that took us eventually to the target, but it didn't drop straight away to the target, but it dropped enough to help you get your goal. That brings us around the world back to the S&P daily, and we have put in a new high since we began the broadcast. Keep in mind, this high right here is your next big picture obstacle, 46.46. Okay, all right. To become a lifetime member, go to mytradingiq.com, or if you have a question, you can call 949-42-EMINI or send an email to support@cfrn.net. Now, the CFRN Passport, that's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future, with no recurring fees, no upsells, no nonsense, ever. 9 out of 10 new traders fail just simply because they don't have someone to teach them how to do the job. No matter what career path you take in life, you're always going to need somebody to teach you how to do the job. But 9 out of 10 new traders, they buy some indicators, maybe some videos, watch some videos, read a book, and okay, I'm educated now. Let me go risk real money. Well, if you're going to learn how to trade for a living, you're going to need somebody to teach you how to job. That's why we have a live training room, 2 hours and 15 minutes every trading day. As a passport holder, you have access to unlimited one-on-one private mentoring, strategy you learn, and the indicators you own for life as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. When you become a passport holder, you'll receive the Logic 247 alerts, concierge trade alerts. You'll be able to attend the members-only workshop every Thursday night, and you'll have around-the-clock support via Telegram. All that and much more. Let's wrap it up with our good word for the day. Acknowledging your mistakes. Proverbs 28:13. Whoever conceals their sins does not prosper. Mistakes are a part of life. Successful people acknowledge theirs, learn from them, and work to correct them. A study of 105 executives identified common characteristics shared by successful people. But one observation was particularly helpful. Successful people admit their mistakes and accept the consequences instead of blaming others. None of us enjoys reaping the consequences of our actions. When things go wrong, we have a natural tendency to look for someone to blame. It's in our DNA. In the Garden of Eden, when God asked Adam what he had done, Adam blamed Eve. And when God questioned Eve, she blamed the devil. The next time you mess up, think about who is really at fault and try to look at it objectively so you can learn from it and do better next time. Somebody said the sooner you fail, the more time you have to improve. Ask yourself, what have I learned? How can I turn this failure into success? Where did I succeed besides fail? People who accuse others for their failures never surmount them. They just move from problem to problem. To reach your highest potential, you must persistently improve yourself. And you can't do that if you don't take responsibility and learn from your errors. In life, you will always have problems. The question is, Will you stay down and wallow in defeat, or get back up on your feet and make the best of things by determining to fight another day? Henry Ford said, "Failure is simply the opportunity to begin again, this time more intelligently." So live by the Bible principle. For a righteous man may fall 7 times and rise again, but the wicked shall fall by calamity. Proverbs 24:16. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.